Welcome to the show. Today is January 25th, 2022. Let me start by saying that I am not a financial advisor. This is not financial advice. This information is intended for entertainment and educational purposes only. So, I haven't made a video in a little bit of time, but there's been stuff happening, so therefore have to make a video. Also, there's been a lot of requests from from you out there asking me to make a video, so here we go. These are my thoughts. Again, this is my interpretation of the world. You don't have to necessarily adhere to it or believe it or whatever. It's, you do you, I do me. It's the whole thing, right? Anyway, there has recently been some shares issued, or there has been an S1 that has been filed with the SEC in order to issue 40 million more shares of Next Bridge Hydrocarbons. That is the main thing that we will be talking about. So let's get started. So if you don't know what I'm talking about, if you don't know what Next Bridge Hydrocarbons is, if you don't know what stock symbol MMTLP is, if you don't know what the U3 halt is and all that, I would recommend you check out one of the two videos at the top left, right? Either the one from the Marine Activist channel where John Berta is talking. John Berta is the guy on the left. He is the ex-CEO of Torchlight Energy, and he will tell you the entire story in better words than I could. He'll tell you about, so Torchlight Energy, just FYI, is a small company. It's a wildcatting firm out of Texas. They found 3.2 billion barrels of oil in West Texas, near El Paso, about 40 miles outside of El Paso. There are some nearby pipelines. There's a lot of oil out there right now. So anyway, so that was found. But it was found during the time when oil was around, negative $47 a barrel. So it was it was a good find, but it was worthless at the time. Now oil has gone through the roof. Oil has gone up significantly since negative $47 a barrel. Anyway, the long story short, Torchlight Energy was shorted out the wazoo, and John Berta will tell you all about that information in these two videos. The second video is really good. It's from Roger James Hamilton. That's more of an interview style video where Roger asks questions. The interesting thing about Roger James Hamilton is his company, Genius, has also been shorted out the wazoo, and he has been inspired by John Berta and what John Berta has done with raising awareness in naked shorting and how this destroys basically American companies. I have an older video about this, which is my take on it. It goes into lots of detail about the 3.2 billion barrels of oil, all that. If you want, check out that link as well too. That's on the bottom. At that time, FINRA had not called the U3 halt, and we were expecting that this that the spin out would happen, and the story was coming to a close, or so we thought. We did not expect a U3 halt from FINRA. So, needless to say, that was unexpected. Anyway, moving on. So, if at this point you should know what the story is or not, if not, check out those two videos to find out. What has happened recently? We have had some movement. Torchlight Energy, Next Bridge Hydrocarbons, which is a spin out from stock symbol MMTLP, what used to be Torchlight Energy. Next Bridge Hydrocarbons has filed an S1 very recently. Ooh, there's an airplane flying by. Anyway, Next Bridge Hydrocarbons has filed an S1. And the S1, this was filed on 1/23, by the way. The S1 is about trying to sell. It's about offering for sale 40 million shares of common stock, par value. But it's not being offered for sale to the public. It's being offered for sale only to selected investors, right? And it's being offered for sale to qualified investors, right? What do you need to do to qualify? Basically, you need to be what's called an accredited investor. This is very similar to a private placement. It means you need to have greater than $2 million of net worth, and you need to be able to prove that you have $2 million greater than net worth. And then the SEC basically says, okay, you have a large enough net worth that you probably know what you're doing with your money, and you don't need to be, coddled by the SEC is basically what you're saying. You're allowed you're basically allowed to invest in things that that the general public is not allowed to invest in. Now, what is the price of these 40 million shares of stock? We do not know. We do know that Roth Capital, who has managed their placement before, is doing this. So this has been done before in the past. Roth Capital is trusted. We do also know if you checked out the first or second video that I mentioned, John Berta tells the story of how short sellers wanted to buy his stock before before the merger, in order to help to close out their short position. John Berta told them basically, well, I will allow the sale of my stock. However, I will, according to the video, John Berta said that he would personally check every single buyer and make sure and approve or disapprove of them. And he went down the list and he said, oh, well, this guy's obviously shorted my company. He will not be allowed to buy these shares. So this is probably what's going to happen in the future, since John Berta, he was the CEO. He advised Next Bridge Hydrocarbons for quite some time. And although he has cut off relations with Next Bridge Hydrocarbons so that he can have freedom of speech, they can still follow in his footsteps, and his story is very well known. Okay. So in either case, the offering price is unknown. The proceeds that they expect to get is unknown. Okay. What do we know? We know that there's 40 million shares. We know that there's no price. We know that there's no date, but we do know that the proceeds are to be used for drilling operations. Okay. We also know that they mentioned on the bottom of this particular, let's see if my mouse works. We mentioned on the bottom of this particular offering summary that the merger with Greg McCabe's assets, right? For Greg McCabe was giving up his additional 17% of the Oro Grande Basin assets. That has not yet happened. Okay, so they are using the numbers of 165 million shares of common stock. So that is good to know. So that's my take on all of this. If you've been on Twitter, you already know what my take is, but here it is. So the 40 million shares is obviously not enough for shorts to cover. The shorts would need something like at least 200 to 300 million shares at minimum. 40 million would do nothing for them. But this is also a private share sale to accredited investors. If you're in Silicon Valley, you know what an accredited investor is. We have tons of those in Silicon Valley, and these are people that venture capitalists, these are typically venture capitalists, right? And people who venture capitalists will work with to raise additional funds for their startup companies. Now, in the intervening time, things to note: the key players have been very quiet. Now, they may be very quiet based upon the fact that there are these rules where if you know certain things that the general public does not know, you're not allowed to speak about them. If you're an insider, you have to abide by these rules where you're effectively gagged. The only way that you can speak is through what's the word? The only way that as an insider in the company you can speak is through what's known as a press release, right? You have to issue a press release so that everyone in the public can know. You can't tweet on it over Twitter because, as far as the SEC is concerned, not everybody is on Twitter. You have to issue what's known as a press release so that overall the general public knows. Now, the sale, this is just shares that are being sold. It doesn't necessarily have to be sold for intrinsic value, right? And if you've seen my videos before, you know I believe the intrinsic value of this oil in the ground is something in the range of $60 to $100 a share, somewhere around there. It doesn't necessarily have to be based on intrinsic value, but what is interesting is it will place a non-zero price to the shares. Why does that matter? Everyone right now has a $0 value to their shares in their brokerage statements, right? If you were to use generally accepted accounting practices, or GAAP, okay, that means that you will have to place a non-zero value to those shares. What does that further mean? That means that the brokers who've basically said, well, we owe you these shares, but they're worth zero, so let's not think about them. Now suddenly it's like, well, we owe you these shares and they're worth money. So we have to think about them. So that brings additional pressure to brokers. That brings additional pressure to short hedge funds who now owe a share, which is not a $0 value share. That share is worth a lot of money. The higher that price is, the more pressure that's brought. And could it trigger margin calls? I don't know. We'll see. It's something to think about. Certainly, the pricing of these shares could make life difficult for shorts and broker dealers because you need to look at mark-to-market. Finally, number 6. Was this to raise capital, or is this an additional capital raise to an unexpected fortuitous event? What am I talking about? What happened is that we know that they do need to raise capital in order to continue drilling, in order to do various other things, right? However, as of the last statements that came out about the drilling, we do know that they found unexpected pay zones. Unexpected pay zones. Does that mean that they might have found a lot more oil and that they want to, drill around to see how much more oil there is? Currently, we've been looking at about 3.2 billion barrels of oil. That number might go up significantly. That's what I would call a fortuitous event. And if it's an unexpected fortuitous event, hey, who am I to complain if they found a lot more oil? I would want them to drill more and figure out how much that additional oil is, right? Anyway. So the question comes up about, so the last part is, does this have anything to do with the clause about $30 million cash on the books and spreading out that $30 million cash? That is what I talked about earlier about raising capital. We know that in the 424B, on page 54 of the 424B that was filed just before Thanksgiving, they said that they need to pay back this $15 million loan. But if they raise an additional $30 million or more in capital, it can be extended out to September 30th of 2023. So that's good to know. Maybe they would like to just extend out that payment a little bit more, like we said in 6 or 7, right? So, given all of that stuff, what's my take on it? Given all of that stuff, so. I think that they will raise money. I think that the dollars per share is likely to be... We know these shares are not going to be sold to short hedge funds. So short hedge funds will not have access to them. The shorts, the people who have been keeping the price of the shares down, will not have access to these shares. So they will not be used as collateral in the open market, right? They will be used by someone who actually intends to keep the shares, hold the shares, and these are non-tradable shares. Again, this is a private company of non-tradable shares. Therefore... Right. The chances are they're being sold to someone that they already know who that person is. They already, those people have already probably been pre-qualified, and it's likely that the dollars per share may be, closer to the intrinsic value of the asset. Right. So I would not be surprised if this sold for less than $150. Right. We know that the shorts need 200 million plus shares, so this will have zero effect on the shorts, right? But it's likely that the dollar value of these shares will not be, as high as during a short squeeze, okay? Now, the other possibility is, could a major oil producer be trying to buy these Next Bridge Hydrocarbon shares, right? Let's say that you're a large oil producer, you want to buy, you want to buy you want to buy the company outright, to be honest, right? However, there's all this stuff going on right now, and shares are really hard to get. In fact, shares are impossible to get right now. But through this placement, you could offer, cash. You could get some shares. You could have a stake in it, and you could also make sure that this company stays viable until you can make a deal to buy out the entire company, right? So if you're a major oil producer, this would be, a good bet for you, right? This would be an excellent deal. And that's a possibility, right? So that was something that I discussed with Meta Support Channel privately on the phone. And he was like, hey, this could be a major oil producer. And he said, keep that in mind. And I was like, you got a point there. It is quite possible. So there you go. Now, the other thing is we are currently in what I call a deadlock situation between brokers, FINRA, the shorts, and Next Bridge Hydrocarbons. What do I mean by the deadlock situation, right? Broker-dealers need to supply Next Bridge Hydrocarbon shares, and they don't, quite frankly, I strongly believe that they do not have enough shares. And they've been holding off and saying, the shares are coming. They're coming from, AST and all that. I mean, they're coming. They're in the works. But we know that FINRA was responsible for making sure that the shorts could not close their positions. So the brokers now have to deal with the shares, the phantom shares that shorts have created that have come into existence. The broker-dealers they don't want to ask the shorts to close their positions because they want FINRA to make sure FINRA tells all broker-dealers to close their positions. No one broker-dealer wants to tell the shorts to close their positions. Otherwise, a short hedge fund could come up to them and say, "Hey, look, why are you making me close your position here when this other broker isn't? You guys are doing something that's not right." So the broker dealers are going to complain. So there's the broker dealers. If push came to shove, will say, "Well, we can't tell the shorts to close their positions because we need FINRA to tell us to tell the shorts." They need what's called a corporate action from FINRA. Okay, FINRA wants to wash its hands clean of this because FINRA pulled the U3 halt for reasons that I will not go into. Suffice it to say that I am not. Suffice it to say that FINRA may have some explaining to do about their U3 halt because their explanations do not hold water for most people. Okay. Anyway, in all of this, FINRA is basically saying, "Hey, look, it's up to Next Bridge Hydrocarbons. They're a private company. We don't want to have anything to do with it," right? So that's a deadlock right now. Next Bridge Hydrocarbons is saying, "Hey, look, we are not going to come to broker dealers and offer them shares because, quite frankly, they're saying that they don't need them. They're saying they have enough. If they want shares, they got to come to us, and then we will charge them whatever we think is appropriate." Okay, so Next Bridge Hydrocarbons is not going to go to the broker dealers or the shorts or anything like that and start offering them shares. They'll get the door slammed in their face in the first place. They want FINRA. They want FINRA to come to Next Bridge Hydrocarbons to say, "We need extra shares. Help us out." And then Next Bridge Hydrocarbons will basically say, "Okay, we will sell you the shares, but it's going to cost you." And FINRA and that's the conversation that Next Bridge Hydrocarbons wants. In either case, because of all of that, we have what I like to call a deadlock situation, right? A deadlock. That deadlock there are ways that deadlock is coming out of deadlock right now. I'll explain that later. But right now, let's just say that it has been, prior to the last 2 weeks, it has been, for the most part, been in a deadlock situation, right? But when Next Bridge Hydrocarbons starts selling additional shares, that means additional shares are available. Shorts can't say, "Oh, we didn't know that we could go to Next Bridge Hydrocarbons and get these additional shares." Broker dealers can't say, "Well, there were no shares to get. We wanted FINRA to close their position. We don't know what." So basically, this opens the door. This says, "Oh, Next Bridge Hydrocarbons has additional shares, is willing to sell additional shares. If FINRA did not go to Next Bridge Hydrocarbons to get additional shares in order to solve their short hedge fund problem, in order to solve their synthetic short problem, and FINRA also did not allow the shorts to close their position, what the hell is FINRA doing?" Right? FINRA is not protecting investors. FINRA is protecting its own. FINRA is protecting its buddies, or FINRA is protecting one of its members. I won't say whom, who's basically or an advisor to FINRA, who's basically a short hedge fund himself. I mean, give me a break. So anyway, this sale may grease the wheels, and it indicates that Next Bridge Hydrocarbons is willing to sell shares to broker dealers for the right price. And I think that right price is maybe $1,000 a share or above. Could be, who knows. But that would be fine, as far as I'm concerned. So what does this mean for all of us shareholders, right? Previously, I had this chart out here, which came from this estimate of share count is based from Russ Race's data, where he provided this info on January 12th, And it's basically pretty stable right now, right? So according to all of this data, I'm guessing that they're somewhere in the range of, I don't know, 488 million shares, somewhere 488, 475 million shares, somewhere around there. Who knows? And as a result, there's about 320 million shorts. I mean, there's been about 300 million shares that's needed by the short hedge funds, right? And broker dealers, FINRA, etc., right? In order to solve this situation. With an additional 40 million shares available, note that those 40 million shares are not going to shorts. If we just threw those shares in there, that could potentially make dilution happen, and that could mean that short hedge funds need to raise about 282 million. I don't know that that's the case, right? I don't know that that's the case anymore. The estimate still remains the same. However, the number of shares has increased. So the number of shares that's increased means that this is possible dilution, but I don't think it affects the numbers that much. In either case, short hedge funds need to deliver a lot more shares than have been issued. And so this share price can go towards infinity, in a squeeze, right? So how long will this take? That's a good question. Ham Short Killer, who's been tweeting a lot lately, check out his tweets. It's kind of interesting. He's been tweeting a lot lately. He says, I can't believe they haven't already done it yet. And the question was, any guess on when we might see MMTLP get trading back, right? Or get movement? He's like, I can't believe they haven't done it already. So, interesting. To which there's a good reply by Costas GGK. Says, 64,000 plus MMTLP holders are asking the same thing. Logic and past history says they need to open trading to clear up the oversold counterfeit shares. I agree. Who isn't allowing that? Is it FINRA, the SEC? Is it Gary Gensler? Gary Gensler, if FYI, is the head of FINRA. Gary Gensler is the head of the SEC, right? He's the SEC director. Who are they protecting? It certainly isn't retailers, right? And I agree. They're not protecting retailers. They're protecting short hedge funds, it looks like. Now, this is an interesting tweet that came up. And thanks again to Metasport Channel. He forwarded this to me. And he says, this is from Adrian Ramirez. He says, I just called AST and they confirm my transfer of shares from Fidelity. And even gave my account number. But they also told me that these are not shares but warrants. And NextBridge will be the one to determine when these warrants become shares. To which my initial reaction was, WTF? What? Who here bought warrants? I know I didn't. I bought shares. I told Fidelity, buy me shares. Don't buy me warrants. I don't want warrants. Does anyone here know what warrants are? I'll tell you what warrants are. Warrants are not stock. Warrants are essentially long-dated call options, right? They have a strike price and an expiry date, And quite frankly, most warrants, they expire worthless. Warrants are typically issued by the company in addition to a stock to certain shareholders at the very start to entice them to buy shares. A stock is different. Stock is not a warrant. A stock is a partial ownership in a company. Stocks don't have an expiry date, okay? Stocks don't have a strike price. Stocks are stocks. Warrants are warrants, okay? So what am I thinking? I'm thinking that these quote-unquote warrants, they typically, I don't think they're warrants because warrants were never issued by Next Bridge Hydrocarbons, okay? This is most likely a long-dated call option. And where did this long-dated call option come from? It came from a short locate, I think. So this is likely a long-dated call option because some guy somebody who naked shorted MMTLP, they likely had, they said, well, we can't find the stock anywhere. We can't do a locate. Well, let's get a call option. Let's find someone to write a call option, and we'll say that's it. That's our locate, which apparently they're legally allowed to do, which is another ball of, I don't know. That's another can of worms there. Anyway, they should not be doing that. But in any case, when you do a DRS and you transfer your shares over to AST, You're transferring shares. You're not transferring warrants. This proves that you're getting warrants over there. You're not getting shares. You're getting, AST is interpreting it as a warrant. AST does not accept call options. They don't accept long-dated call options, okay? AST is like, hey, look, all we got are stocks and warrants. And you're giving me a long-dated call option with a strike price. Oh, that's a warrant. That's where that's coming from. Now, in the past couple days, as we know, FINRA has been running tests of halts and resumes. People have been talking about this. This has been going on, right? Test J and all this other crap that's going on. And then yesterday, we see hundreds of tickers that mistakenly get halted in the morning. It's like, what happened? FINRA has been running tests for halting stocks, and then suddenly stocks get halted. Is anyone surprised about this? This is what's called a bug. Or this is what's called a test. Or this is what's called something else to try, or this is a test gone wrong that just magically happens to get someone a lot of money. Who knows? I don't know what this is right now. But let me tell you what the result of this is. The result of this is, thank you, Copy-Paste, for retweeting this. Copy-Paste retweeted this from the Kobayashi letter, right? So in the first 10 minutes of trading yesterday, this happened yesterday, the New York Stock Exchange halted about 100 stocks. About 100 of them. That's a lot. That's a lot of stocks. Okay. These included things like Walmart, McDonald's, and, WTF happened. Right? But the total swing in the market cap for these stocks, the total swing is somewhere around $400 billion. $400 billion. Think about that number. I don't know. I'm thinking, hey, somebody got $400 billion. Just, what the hell? Who knows? And, what's the word? I'm trying to look for the right word now. Some safety cells, right? I mean, so people have this thing called this, where they will sell a stock if it drops below a certain point, right? Those things got triggered. I forget the word right now. Anyway, so a bunch of people got a bunch of stock at a dirt cheap price, okay? This hit the news. This is not just Twitter. But Twitter, so the reason I like to look at Twitter tells me things before the news happens, right? It takes a while for the news to figure out what's going on, and they have put their own spin on it. Anyway, this is Reuters. They said, hey, look, New York Stock Exchange glitch leads to busted trades, prompts investigation. You know what? This tweet by Copy-Paste from the Kobayashi letter, this told me the heart of what I needed to know. The total swing in market cap for these stocks is estimated to be over $400 billion. Okay. Here's the news article from Reuters. Do I see $400 billion anywhere in here? I looked. No, you don't see $400 billion anywhere in here, right? You would have to do that work yourself to figure that out. So this is what I like to call spin, right? They give you the information, but they put their own spin on it, and they leave out certain things, right? They said, a spreadsheet is available from the exchange. It shows 251 securities that are affected by this. ExxonMobil, right? 3M, McDonald's, Wells Fargo, all that, Walmart, And by the way, nobody commented because no one knows what's going on. It's confusion. We don't know. See, this is why Twitter is awesome. Twitter tells you, people on Twitter are smart. We check stuff out. We're like, what the F is going on here? And how much is this costing, right? That's what a news reporter should be doing. But they don't, because there can be repercussions to this. Let's just look at one of these stocks, right? I just randomly happened to pick McDonald's. Just for the hell of it to see what happened, right? Let's look at McDonald's. Oh, wow, this is yesterday. This is yesterday's stock price from McDonald's, right? So this is today stock price at McDonald's, right? Between above 267, below 275, somewhere around there. It's trading upward, up and down, Brownian motion. This is what happened yesterday. Look at that. It dropped all the way down to $248. Okay, it dropped down a lot. A huge drop. Let's see how that compares to, I don't know, a year out, a few years out, a month out. Oh, wow, look at that. This is equal to like months and months of, this drop is equal to this huge month's run up that happened several months ago, last year, right? So that run up that took a long time all happened in seconds. And that triggered the halt. There you go. That's what happened. Anyway, $400 billion. $400 billion. That's what that's worth. You know what I'm thinking? $400 billion is about the size of the problem of MMTLP and Next Bridge Hydrocarbons. This is about the size of what I'm thinking the shorts need to deliver. I don't know. Just random numbers out there. It just seems to be a coincidence that that's what it seems to be worth. Could this pay for this? I don't know. Who knows? Who can tell? Anyway, let's move on. We're moving on now to this tweet by jcroc149. MMTLP family, although this is just hearsay, it looks like all the attention on Rosa Twills and the quick-ass response may have a resolution closer than you think. Right? And he has a screenshot of Fidelity on Reddit, or he has a screenshot of our MMTLP _ on Reddit. He says, according to Fidelity, a resolution may be coming by end of month, which, by the way, is very soon. Thought you might find this interesting. A Fidelity employee called into Fidelity to request a DRS transfer of their MMTLP shares and was advised they wouldn't recommend initiating a DRS right now because they believe the next phase is action by the DTCC. We think this will be resolved by the end of the month. Isn't that when Rosa Twill needs to do, isn't that when there's a lawsuit response that needs to come from the judge? I don't know. We'll see. Also, the end of the month is happening after the Occupy SEC demonstrations, when there's a lot of awareness will be raised about this, right? Who knows? Anyway, so here we go. Copy paste also tweeted this. Copy paste is WD Morgan too, and thank you, Copy paste. You have been of enormous help in letting the entire community know and everyone know about things that have been going on. So I appreciate everything you do. Okay. So what does Copy Paste say? He says, Occupy SEC 2023 to be interviewed by Charles Payne on Friday. We did it. Yes. That means that not only will the SEC know about this, which is important, but major news organizations will be talking about this. And if one major news organization wants to talk about it, it could get picked up by another major news organization because other people could be talking about it and they don't want to be left out of the conversation. So if you are a news organization and you have an agenda, let's just say you don't want to talk about a particular subject matter, and so another news organization starts talking about it, now you, as a news organization that does not talk about it, is left out of the conversation. You have no influence whatsoever. And this is a good reason for news organizations to start talking about this, even if they don't want to, because they don't want to be left out of the conversation. They don't want to be one of those people who isn't influencing the conversation in any way. That's what a news organization actually attempts to do, is to influence the conversation, influence public opinion, and influence that in that way. Okay. Anyway, moving on forward. C-Plant has made a tweet that I think is very interesting. I thank you, C-Plant. The trend is your friend for doing this, for making this tweet. Apparently, some people are freaking out. Let's just read C-Plant's tweet. Number one, why is everyone wigging over the possible sale of some shares? Okay, as I see it right now, Greg McCabe is the bank. When a bank loans out dollars, they take it from their reserves, which is usually held in securities, i.e. bonds, treasuries, the like, right? I doubt the man has $20 million just lying around, idling, right? If you had $20 million, would you leave it in cash just lying around in the bank? No, you'd have it invested in various things. And Greg McCabe probably has it invested in, Next Bridge Hydrocarbons. These are the facts as I see them. You don't have to see them this way. I don't care if you do or don't. It's your dollars. Do what you want. I agree with everything C-Plant has to say here. Do what you want. It's your dollars, okay? If if I would have a greater investment than MMTLP at the time, I may have sold mine too. Don't judge the man until you walk in his shoes, right? Walk a mile in someone's shoes before you judge them, right? I agree. Makes sense. Before the MMAT dumpster team jumps in to FUD my MMTLP and Next Bridge Hydrocarbons thread, understand that I, meaning C-Plant, owns 25 times more MMAT to MMTLP. So there's that. I'm just putting out printed facts on Next Bridge Hydrocarbons since they have their hands full. And we're stuck because of FINRA Corp. We are stuck because of FINRA Corp. FINRA, you got a lot to answer for, you know. Moving on. If we look at the details of the first tweet, because it's, you know, we click on show this thread, what happens? You get this. he breaks it down what, you know, Greg McCabe has been doing. He breaks down the inputs, right? Greg McCabe has, he borrows $25 million from Metamaterials, right? NextBridge borrows $15 million from Metamaterials. So NextBridge, so in total, they've borrowed about $40 million so far, right? McCabe, Greg McCabe does a loan to NextBridge, right? $20 million. So now we're up to $60 million. Okay. So the inputs to NextBridge has been about $60 million or so, right? Now they're spending, for 5 wells in 2021, 2022, and then in 2022, 2023 has been about $39 million so far. Okay. So they spent a fair amount, right? And in addition, they got administrative expenses of about $19 million. So total expenses, about $58 million. Let's just say, right? That means you got, you only got $2 million left. NextBridge only has about $2 million left at that point, right? And that's the money that's been put into it. So they'll probably need some more money. Okay. Doesn't take long for it to add up. We're just getting started. Here's a reason for the new money requirements. If they raise more than 30, the due date of the debt back to MMAT gets pushed out a little further. It also allows them more time to get wells producing and income coming in. That's a good thing. Okay, that's what you want to get. Okay, so there you are. NextBridge probably has about $2 million left, and if they can push out having to pay some debts, that's good for them. Awesome. So now might be a good time to get to actually raise some funds. Let's not forget, Greg McCabe also has a note coming due back to MMAT for the first round. Anyone willing to make that note payment for him? Anyone out there wanting to go all in on the play? This is what has to be done. He's not leaving. He's just dug in further. Okay. If he sold a few million shares, who gives a damn? It's his money. He has to keep the party going and pay his obligations. He's got debts to pay as well too, right? Remember, he just gained 56 million shares by going all in, okay? The information in the S1 is the most current published, but is the most current published, but not the most current. True. Stop listening to the noise. Think about it logically. If you are a GM, what's your best move? And what do you need to do to get to the next level, right? We need production, and the oil and gas is there, so WTF, let's produce it. Let's get some more, let's get some oil and gas, sell it in the most economical way possible, right? We have at least two horizontal wells that are capable of producing, and at least 4 to 5 other verticals that are capable as well. There are 2 other wells drilled by Trail Mountain that are vertical shut-in gas wells that could be added on top of the new wells and drilling. He says, I smell money coming in, okay? And of course, they would have to use that money to drill more wells as part of the continuous drilling clause. These are the facts as I see them. You don't have to see them this way, okay? I don't care if you do or don't. It's your money. Do what you want with it. If I would have a greater investment than MMTLP at the time, I may have sold mine too, So don't judge me don't judge the man until you walk in his shoes, right? Don't judge a man until you walk a mile in his shoes. That's pretty much a good thing to do. And then he talks again about the dumpster fire, right? Okay, so there you go. So to which we get this reply, bingo, you just, what happened is that Greg McCabe just took a big loss on the true value of those shares, right? Just so that he could fund Next Bridge Hydrocarbons. We should be glad he did what he did. We can continue developing the field thanks to him. And C-Plant says, 1,000,000%, right? He agrees. million times. My take on it, I agree. Yeah, if a guy sells some shares, right, he needs to pay some bills, right? Whether the bills are for his company or whatever, it's because he needs to pay bills. What's the big deal? Okay. I've been in a situation where I was buying shares and I knew I would buy some shares in the future, but I needed some quick cash. And so I would sell some shares, not of Next Bridge Hydrocarbons, but this is of a company that I worked in as part of the ESPP, Employee Stock Purchase Plan. I was continually buying shares. And every now and then I might need some additional cash for some opportunities that come along. So I might, spend more money than I take in, and I would, sell some shares and then buy those shares back later. It's a good thing. So that's just the way the world works. If you need to pay the mortgage, you're gonna do what it takes to pay the mortgage, right? You're not gonna have your house foreclosed on you, right? I'm not saying that was my condition, by the way. Anyway, he said he kept 95% of his shares. He's converting more assets to shares, right? So what would you do if you needed to raise some cash to pay bills? Let's be reasonable here, right? Let's just be reasonable. So I don't view it as a big deal. If Greg McCabe sold some shares, I don't know if he did or not, but if he did, not a big deal. He's got 95%. He kept 95% of it. He's not selling the majority of it. He might sell a little bit, and he could buy some later. Okay, who knows? I wouldn't worry about it. If he sells everything, that's a big deal. If he sells a large portion, that could be a big deal. Could be, but not necessarily. He might have found a really golden opportunity, right? We'll see. And then he might be able to buy it back later. But selling less than 5%, meaningless. Totally meaningless. Anyway, so let's see. This thing is coming up soon. Friday, we have this Occupy SEC 2023 happening. Metamaterial News, thank you for posting this. He said Occupy SEC 2023 is about 48 hours away. Let's help get it trending. This is basically some demonstrations that's happening outside of SEC headquarters at various cities, including Washington, D.C. It's getting a lot of press coverage. I think it will get a lot of press coverage. We know at the very least that Charles V. Payne will be covering it, and hopefully more people in the press will be covering it, and hopefully they'll be able to understand what's going on. If we keep the message simple, that'll be very good. News teams will probably spend less than 5 minutes to say, oh, there's a rally going on. We'd like them to be able to understand what the rally is about. Because, the first thing a news media might say, oh, there's some rallies going on of some lunatics outside the SEC office. We don't want them to say that. We want them to say, oh, there's a rally going on from some investors outside the SEC office because the SEC has not been doing their job. They've been allowing naked hedge funds to run rampant. And they're protesting about that. People have lost a lot of money. That's what we want them to say. In either case, for everyone out there, the message that has been going out this weekend, and I will reiterate, is be safe. Okay, be safe, and don't riot. No one wants a riot. Be a model citizen, because they, quote unquote, they will try to demonize you. Okay, be a model citizen. Do not get involved in anything that could go wrong in this. Large numbers of people out there. There could be some agitators out there. Do not be, if someone wants to agitate, just let their words fall on deaf ears and basically, say this guy doesn't represent us, you can, etc. But do not engage in any sort of confrontation with agitators. There's probably going to be a bunch of them out there. Who knows? They're, paid agitators from the other side. Expect it. But for everyone out there, be a model citizen. Okay, be the kind of person that they don't want you to be. Be a model citizen. Be the kind of person that people can say, hey, look, if your grandmother was looking at you, you would want your grandmother to be proud of you. Okay, that's the way I look at it. Be a model citizen out there. So lots of stuff has been happening, right? Occupy SEC, that's the last thing I talked about. There's Rosa Twill's lawsuit in a federal court in Florida. That's happening, and we expect to see some results start of February. We got Flamethrower. I didn't mention Flamethrower before, but that was in my last video. Flamethrower is the LLC that's been put together by John McCabe and 3 other people who are OG Torchlight people. Okay, and they have gotten together with Wes Christensen. They're doing investigations on exactly what happened with the short hedge funds. I suspect a lot of that info is known, but they will be getting investigations, and chances are they will be contacting what is it? That company that will actually do the analytics to figure out how many shares have been shorted in actuality, and they will present that information. John Berta and Roger Hamilton have been doing videos. They've been raising awareness. Why does this matter? Because a lot of people are watching this. Roger James Hamilton has a Twitter following of almost 1 million people, okay? 900,000 or so plus. And that brings a lot of awareness to the situation. Roger James Hamilton has a company called Genius, and his company has been shorted into oblivion. So he says, "Oh, look, he's been inspired by what John Berta's doing and what's going on, with Next Bridge Hydrocarbons, and he wants to follow down a similar path. This is a good thing. This is a very positive thing. People are getting enthused about this. We saw the price of Genius go up significantly over the last week. Again, be careful of this. I think that there are a lot of, although the price went up significantly and there was a ton of buying, there's also a ton of naked shorts out there on this. So just be careful. Just be aware. Anyway, that's a big deal because awareness is being arisen. Okay. CEO block is also happening. CEO block is started by Roger James Hamilton, where CEOs are getting together. They're understanding what's going on with the naked short selling. They're presenting information to each other and showing how they can get information and how they can actually fight naked short selling as a CEO. So that's pretty good. That's happening already. And so the story in general is spreading, okay? The story of MMTLP, of FINRA, the U3 halt that happened, all of that crap that should never have happened, that FINRA should never have done, that word of that is getting out. And all of that is because of infinite naked shorting that's going on. Infinite naked shorting, right? Those shares have never been covered. And because word is getting out, politicians want to get ahead of this, right? Congress may be interested. I'm hearing that there was a subpoena that was sent out by Congress. I don't have confirmation of that, but that's what I'm hearing, right? I'm hearing that there has been a subpoena that is sent out. And if that's true, that's a big deal. Because Congress doesn't want to be seen as do-nothings. They want to be seen as do-somethings. Okay, it's very important. If they need to, sacrifice a lamb, if they need to crack a few eggs in order to make an omelet, that's what they'll do, and it's not a big deal to them. So, what does all this mean? It means that shorts need a new IPO. So why do I care about all of this? Okay, so let me explain. If you're a short, you need new IPOs to enter the market, to enter the stock market, because what you do is you short them. That's how you make money as a short, okay? Now, brokers need companies to go public so that people can trade them, okay? Brokers also, deal with the short hedge funds, and they loan them shares and get back, they get a portion of these borrow fees, right? So brokers make money from the shorts. Brokers make money from trading of stocks. Brokers want companies to go public. But if all of this stuff, if all this info gets out in the public, right, and nothing is done about it, what happens? What happens is that, if you are someone who has a really, really great idea and you start a company, you might raise some private equity, right? Friends, family, etc. Then you might even get some venture capital funding. You might even get some angel funding. And as a company, you can start making some money, but you may decide as a company that it's not worth it for you to go public. Why? Because if you go public, you'll be shorted out. Your company will be shorted into oblivion, and you'll never be able to raise money ever again. Your stock price will go towards zero because of short hedge funds, and that's what they do, right? So if you decide you don't want that for your company, if you decide that you don't want to go the route of IPO, and all the other companies that start up, have that information and they know they don't want to go IPO, what happens then? Well, shorts have no one they can short. Broker-dealers have fewer companies out there for the public to trade, right? What happens is that the golden goose gets killed, for the shorts at least, and for the broker-dealers as well too, right? The golden goose gets killed. Now, do you think that they would rather fix the problem with Next Bridge Hydrocarbons and MMTLP? If they have to throw out a sacrificial lamb or a scapegoat, they will. I'm sure they will. If they have to blame it on one person or, say, hey, look, it's just a few rotten apples. The barrel is good. Right? Do you think they'd rather say that? Or do you want to say, hey, look, the barrel's rotten. You don't want to be in this barrel. You don't want to be anywhere in this orchard. Do you think they want to blame a scapegoat and go on with business as usual? Or do they want their golden goose to go away? Right? What's being threatened with all of this information that's coming out is the golden goose could go away. People could decide they don't want to IPO. And if that happens, well, a lot of people will be in trouble. And whether you know it or not, whether you believe it or not, my belief is that FINRA, which is a non-governmental organization, they don't take 1 cent from taxpayers. That's what they say. They don't take 1 cent from taxpayers. That means they are funded by broker-dealers. Do you think FINRA, who is funded by broker-dealers, right, as a self-regulatory agency, as an SRO self-regulatory organization, do you think FINRA wants broker-dealers to suffer? Do you think FINRA wants this crap? Or would FINRA rather say, oh, we made a mistake? Or would FINRA rather say, hey, look, it was this one guy, it's not our fault. We're good guys. What do you think they would rather do? Do you think they'd rather go on with business as usual, throwing out a sacrificial lamb, saying, hey, it was all the fault of that guy? Or do you think they would rather just... Or do you think they would rather see, their golden goose go away? I don't know. Just some questions. Anyway, this is not financial advice. I am not a financial advisor. This information is intended for entertainment and educational purposes only. It is January 25th, 2023. And this is Tony with Market Moves, and I'm saying goodbye.